JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 27th of January 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is Nikkei. Just a quick update because not a lot is happening here. However, on one hand, we're still trading above some of these upside lines here, which kind of could support the idea of seeing this index pushing further north. However, if you want to get a little bit more excited with the upside, well, probably wait at least for a break above the 28,979 zone here, which is near the highest point of January, the current highest point of January, and then we could go for some higher levels. But at the moment, it is how it is, guys. We're just kind of moving sideways here a little bit. So yep, let's wait for that better move here. If you want to look at some downside, well, at least in the near term, well, you could probably wait for a drop below this upside line drawn from the low of the 22nd of December. At the same time, the index would be placed below the 21-day EMA, and maybe more sellers could see this as a good opportunity to step in. So yep, let's wait for that move. Now Hong Kong's Hang Seng index, so still trading fractionally in the positive territory, and well, fractionally just above this upside line taken from the low of the 28th of December. So this little short-term tentative upside line so far is the one to watch, although today we did see a bit of a break here below that area. Now, it will be interesting to see if we can actually break eventually this upside line and drift lower. However, as I mentioned before, in order for me to, let's say, get a little bit more excited with the downside, I would need to see a nice good drop below this 29,169 territory right here, where the index today found support. And that level is, and let me just go back here a little bit, that level is the highest point of January of 2020. Or in other words, the highest point of 2020. So if we get a nice drop below that, then yes, we'll go for some slightly lower areas. Now the German index DAX, so had a good run yesterday, closed in strongly in the positive territory, and well, the most important is, and this is what I kept talking about, guys, that every time when we have a violation of the 21-day EMA, every single time we have to keep an eye on the following daily candle, because even when we get that break here through this 21-day EMA, then we see that the following day kind of daily candle ends up being back above this 21-day EMA, and well, from there the index kind of rallies and pushes higher. So we're having a similar story here right now. We are seeing that, well, we saw that yesterday's candle ended above this 21-day EMA, and if we take a look at the cash index right now, well, we can see that the price is currently The price is currently hanging around the 13,865, if I'm not mistaken, 62, 60. So basically around 13,860 zone. And well, that's basically above this hurdle, above this 13,795 territory that I talked about. So in a way, everything is right now working out in according to these previous scenarios where we saw this particular pattern. In a way, yes, we could see some higher levels. However, be very careful near this downside line, because in order to get a little bit more excited with the upside, well, I would rather wait for a break through this short-term downside line taken from the high of the 8th of January, and then I could go for some higher levels. But at the moment, guys, it's a little bit of a tricky one. So let's see how this is going to play out. In terms of the downside, I need to see this one falling back below the 21-day EMA, below this 13,795 territory right here, in order to kind of, like I said, get a little bit more excited with the downside. Now, jumping into DXY here, and the dollar index so far, I mean, continues to oscillate around the 21-day EMA, well, let's see how this is going to play out, because if you remember, yesterday I talked about DXY, and I've mentioned this idea that if we get a push higher here, and if we get a test of this 19.60 territory again, but it fails to travel above it, and then starts reversing back down, well, I mean, maybe, just maybe, we could be seeing here ourselves a potential head and shoulders pattern here, with the left shoulder being here, the head, and the right shoulder getting formed right now. Of course, this idea will be considered, let's say, even more if we get a breakthrough the so-called neckline, which is currently roughly around this 89.96 level. So I'm keeping an eye on that one for now, because although you could maybe drag it a little bit higher here, but I'm going to keep an eye on this level, because that level is also, and let me just scroll back into history here, and there we go. That's the little inside swing high here of the 12th of April. Let me just double check. Yeah, that's the 12th of April of 2018. So yeah, I'm going to keep an eye on that level. If we get a drop below it, then yes, I'll aim for a possible test of the current lowest point of January near the 89.22 territory. But in case this reverses sharply to the upside, pushes above the 19.60 territory again, now in that case, yes, maybe we could go for some higher levels, but we do have this downside line which is in the way still. So basically we cannot really get comfortable with higher levels until we break through this downside line. Now, jumping into gold. Gold is, well, it's drifting slowly to the downside. However, not really at that pace that I would like it to. I would like it to kind of move, but well, I mean, we know that the market doesn't do always what we want it to do, so we'll just have to take it. And for now, still, I'm targeting this 1819 level, which coincides with the 200-day EMA. I'm not dragging this one way too much to the downside, because again, I want to see how this area is going to perform, if it's going to provide good support or not. If it will, then we might see a nice rebound and a push higher. But if it doesn't, then maybe, well, maybe just, yeah, we could see some lower areas here. For now, just probably be very careful, guys. Some of you probably might try to debate this, and they'll say that maybe this is actually forming a potential kind of a potential bullish flag here. Oh, let me just adjust this arrow here very quickly. So this bullish flag with the pole being this candle right here, maybe again, but the only problem here is that if you would like to go for some higher levels, still a break above at least above the 1875 territory in that case would be needed, because at the same time the commodity would place itself above this downside line. So that's why even if you want to consider this to be a bullish candle scenario, bullish flag scenario, then at least you would need to see at least a push above the 1875 territory in order to kind of get a little bit more comfortable with the upside. But for now, for my kind of main scenario is a little bit still to the downside. Now jumping into WTI oil very quickly here. So continues to balance above this upside line drawn from the low of the 2nd of November. So in a way, everything's still kind of working out here for the bulls. But as I mentioned to you previously, I still need to see a push above the 53.90 zone right here in order to get excited with the upside. Until then, just taking it carefully. Yes, we are trading above this upside line, so we can remain cautiously bullish, but like I said, a push above this 53.90 level is required. In terms of the downside, pretty straightforward. A drop below the 51.50 territory, somewhere around here, could in a way also place the price below the 21-day EMA, and further declines could be possible. So that's why, guys, we are kind of currently playing the waiting game here, but we rather be safe than sorry. Now jumping into Bitcoin. So Bitcoin is drifting lower today. So so far everything is working according to the idea that I mentioned in the beginning of this week and last week as well. So basically, as long as it's going to stay below this 21-day EMA, there is a good chance for this one to kind of drift lower. You can see that we on Monday we did get an overshoot here. But didn't really, let's say, first of all, travel to this downside line drawn from the high of the 8th of January, and didn't really kind of stay above the 21-day EMA. Instead, it just started drifting heavily here, or actually, I wouldn't say heavily, but started drifting lower. So for now, my main target is roughly around this area here, this 28,540 zone, and then I'll take it from there. We'll see how everything works out after that. If we want to consider some higher levels, well, we would need to see at least a break of this downside line right here. Now jumping into AUD/CAD, coming back to some pairs. Oh, by the way, in terms of the economic calendar, guys, today, not much is happening apart from later on during the U.S. session, where you will have to keep an eye on the FOMC statement, guys. So the Fed's interest rate decision, which of course so far is expected to be the same, but of course we'll keep an eye on the tone and we'll dig into the statement. So yeah, guys, for now, I mean, during the European session we don't have much. We have only mainly the information coming out, the economic information coming out during the US session. So yeah, keep your eyes on that, especially, like I said, on the FOMC statement. Jumping into, like I said, the pairs, looking at this picture. So overall, yes, the pair is trading above this upside line drawn from the low of the 21st of October. Everything is looking quite nice and positive here. Also, the positive note is that the pair is now approaching this this downside line here drawn from the high of the 7th of January. And in a way, if you want to aim for some higher levels, well, you have to at least wait for a break of this downside line, because again, it might travel higher here, it might test this downside line, fail to break it, and then reverse back down, and maybe end up traveling back towards this upside support line. So again, that's why I would rather wait for a break of this downside line and then kind of target higher levels. USD JPY, so still waiting, guys. So basically, excuse me, still waiting for this one to well, make something and do something, and in order to aim for some higher levels, well, we need that break of this downside line here. But as we can see, nothing's happening really. I mean, it continues to oscillate around the 21-day EMA. So in a way, we cannot really do much here, and even with the downside, it's not really moving anywhere lower here. So yeah, I mean, for now, it's just the one to watch. I mean, it's going to be interesting. Don't get me wrong; it will be quite interesting to watch which way this one's going to break. For the downside, what you could do here is keep an eye on the low of last week near the 103.33 level. A nice good drop below it will confirm a forthcoming lower low, and maybe lower levels here could be met. But at the moment, it's yeah, it's a little bit of a difficult one. Quick update on GBPCHF. Here the pair is still within the rising wedge pattern. You can see yesterday it had a decent up rise here, decent up move towards, and it's kind of made its way towards this key resistance area near the 1.2203 territory. Let's see if this can actually push further north, because as you can see, we do have a few very strong areas of resistance. So even if it pushes higher here, I'm gonna keep an eye on this one, because I'm still considering this one to be a potential rising wedge pattern, which of course, according to all the TA rules, tends to break to the downside, as you know. But until we get the break through the lower side of this wedge, we cannot really get comfortable with the downside. So, and as long as it remains inside the pattern, it could continue traveling higher, which it does right now. So what I'm also kind of considering here, and given that we have seen various kind of things, well, not various things, kind of these scenarios happening, let's put it this way. When, for example, if we push further north, we do have, you can see that we do have these strong areas of resistance. We push further north, we get a false breakout here, we break out through the upper side of the of this rising wedge, and then the daily candle ends up being here still below this upper side of this wedge and inside the pattern. And basically we're going to be getting ourselves here, first of all, a false breakout, second of all, a shooting star of something like that. So again, we had, and then we could see that reversal happening. So keep that in mind. I mean, the market does like to kind of do these little things here to traders. So yeah, keep that in mind, guys. If you want to be a little bit more on the safe side, you could just wait for a break of this lower side of the rising wedge and then aim for some lower areas. But I mean, if this pair somehow manages to push strongly above the 1.2260 territory right here and ends up staying above it now, and that level is the highest point of June of last year, now that's where I'm gonna scrap the whole idea of the rising wedge, and I'm gonna start aiming for even higher levels. GBPUSD. So GBPUSD also pushed higher nicely to the upside yesterday. So yep, everything's kind of looking quite positive here. However, again, we're at the same level, and this is what I talked about in the beginning of this week, guys. If you want to aim for some, or you want to get a little bit more excited with the upside, wait for this 1.3746 level to get violated, and for the daily candle to remain above it. And if it continues to trade above this 1.3746 zone, we will continue aiming higher. For now, it's a little bit tricky here. So yes, let's see how all this is going to play out. But for now, it seems that yes, the pair does want to move higher. However, we will continue monitoring the political situation in Britain, and especially regarding the coronavirus situation, because any negativity from Britain coming out, or should I say more negativity coming out from Britain, could result in this pair falling heavily to the downside. In a way, you could also say that this pair is forming a possible rising wedge here, but at the moment I'm gonna just ignore this upper bound here, not to overcomplicate things. And finally EURUSD. Again, not much happening for the kind of past few sessions. I mean, that I'm talking about talking about EURUSD. It kind of continues to oscillate around this 21-day EMA. So basically still the same analysis remains, guys. I'm not going to go through it again, but basically what I'm going to say here is that for the downside, what I'm looking here is I need to see a daily candle staying below the 1.2158 territory here. Sorry, 1.2130 territory. There we go. 1.2130. I need to see the daily candle remaining below it in order to consider lower areas. But for the upside, I need to see that daily candle staying above the 1.2210 territory in order to get a little bit more comfortable with the upside. So guys, that's gonna be well, that's it for the session. I hope you found it useful. Thank you very much for your views, for your likes, guys. I really appreciate that. Really do, and thank you very much for that once again. I hope you found it useful. If you want to catch my video later on, my trader's tea time is always 14:15 GMT. For now, have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.